All right, so there that goes. And then it's going straight to YouTube. There it goes. All right, so everything just went live. Hello, Mike. How you doing today?
Doing great, Charles. How you doing?
I'm doing well, thank you. For the audience that doesn't know you, who are you and what do you do?
My name is Mike Krass. I'm the founder of MKG Marketing. So we're a digital marketing agency that works with startup, scale up, and exited cybersecurity, information security businesses. And we help them out with their marketing to help them grow. And besides that, similar to Charles, I am a pilot of a small airplane. So we share that hobby in common, Charles and I do.
I forgot about that. It's been a while since we spoke about flying. So tell me,
Yeah.
Mike, with all the things that you do, let's try to dive into the first maybe three things that we want to talk about today, which are basically investors and investment vehicles, investments in general, but talk about some of the executive roles and responsibilities, as well as maybe what a startup could learn from this episode and what they might want to do and what they want to be mindful of moving forward. So I figured we could probably start at the top and we could start with the investors. What would we want to tell the investors, or what would be a great marketing tip to communicate to them about maybe their portfolio or some of the companies that they currently have a stake in?
Yeah, that's a great question. So, as an investor, and you know this better than I do, Charles. Oftentimes, you're investing money into, you're bringing a business into your portfolio. You're investing money into them, and you're looking for growth, right? So that's sales and marketing, trying to go to market. You've got this product, in some way, shape, or form, whether it's just an MVP or whether you feel like you've really gotten product and persona fit dialed in. So you're thinking, how are you going to grow this thing, right? Like, I'm going to give you some money. I want you to make this company bigger. How do we grow? And so, a couple things that an investor might be interested in and take away from this episode. The first one is thinking about the size of the check and the size of what that marketing investment could look like, right? So, are you an aggressive investor? Are you looking for that business to be spending, 10%, 15% of their top line on marketing and sales, 20%? What is the appetite for growth? Are you more conservative? You're more on like the 2, 3, 4, 5% range of top line investment. So, for an investor, I think the first thing that I would say is really a question back to yourself of how fast are we expecting this particular investment to grow, and is it ready to grow that fast? I'll ask you that question to continue the conversation, Charles.
Yeah, great.
I'm sure you've had certain investments where you were like, hey, we need to grow, but we don't want to grow too much. We don't want to get ahead of our skis here. Versus others where you're like, this is gasoline, grow as fast as humanly possible. Like, you're ready. I'm sure you've seen that, right?
Oh yeah, absolutely. So it happens often. You didn't tell me you can't. Can you still hear me?
Yeah, you're
No, you
good.
can't hear
Keep
me.
going.
Okay, great. Yeah, so the
Yeah.
audio thing just stopped telling me it was recording, but I looked at the wrong thing on my side, so I'll have to edit that part out. It's okay. Um, so from the investment point, say I'm an investor, say I've got a cybersecurity and technology portfolio, say I've got maybe five startups. I've got five companies, maybe pre-seed, seed, and we're looking to find some way to break into the US market, for example. And what would we want to plan for? What would we want to do? How would we want to position ourselves to basically take these five or maybe even 10 or 15 companies go to market strategy just to really get the US market known to them so they can actually be exposed to the US market because maybe think about we're overseas and maybe somewhere in Europe or whatnot. And we want to really
Sure.
get some attention from the American investors, but also the American consumers.
Got it. Well, in today's day and age, and you and I are recording this here at the start of 2024, my big recommendation and what I'm seeing that's most successful is focusing on thought leadership and high level branding. And this is interesting. I know that y'all don't know me very well, but I come from more of a performance marketing background, right? So you put $1 in the machine and $2 comes out, and anything that isn't that doesn't matter if it can't be tracked. Like, that's my background. And today, really what we're starting to see better performance around is building the brand. So instead of just focusing on product-led marketing and leading with speeds and feeds and features, it's about building that brand as you're breaking into the market, because frankly, nobody is going to know who you are. It's a crowded space, and it takes a long time to get through to a closed won deal, right? Like you could get into an account, you could even get into a POC stage, but then depending on how your product performs against others in that stage and how it's evaluated after the fact, you might get dropped off there. That happened to a client of ours last year. They were getting into a lot of POCs, but they could not advance past that as the buying committee was evaluating the different options. So for them, they were all focused on speeds and feeds, product-led marketing. Let me tell you what the product can do. And it's really what if you were coming in from Europe with 5 or 10 or 15 different companies in your portfolio, I'd be telling you to focus on building the brand, introducing yourself, not focusing on rented channels or rented marketing programs, like paid search, for example, which there's nothing wrong with, but you're renting that space on Google's search engine result page, right? You don't own that. So I'd really recommend you focus on things you can own, right? Your own content strategy that's telling your business's story, building up your own email list, building up your own podcast or media property around the business that helps to surround an individual, where they get to this point where they just go, I can't seem to get away from this logo. Like I keep hearing this company's name, and now they're in in Slack, we all back channel each other on, have you heard of X? Have you heard of Y? Like, or you go to, an investor meeting and you're like, I just got 14 cold calls from XYZ company. Like, are these guys for real, or do I need to permanently block them from, my phone from ringing through? So I'm really seeing and recommending, it's about building the brand, and it's about owning that experience as opposed to rented spaces at this point in time, especially at the portfolio level. Trying to build up all of their brands it's a big project, but it's an investment that's well worth it.
So I know we're going to jump around a little bit because you hit on a couple of key points that I wanted to highlight for. So if the investors need a plan and they need to build out something for their portfolio, so jumping to the third one, which is the startups, what could we expect the startups to actually want to do? So if they've got the investors and they've got this marketing budget now that they're in tune. So from a startup perspective, now what does the startup actually, all those subsidiaries of those portfolios actually need to do? What do the startups actually need to get ready? So when they go back to the investor, the VC or whomever, they've actually got their marketing stuff together. So when the VC contacts you, for example, they've already got everything together as a package. What would they need to get together to make sure that they're ready for the next step?
Yeah, and I'm going to assume that we're going to bypass the build versus the buy conversation in this story, right? So they're determining we don't have the time and the time and the capital runway to build this all on our own. So we need to buy our way into this plan, is really what you're referring to, Charles. So I always refer to the plan for a startup as really, you're looking at, who do you need to hire, right? Is this an individual contributor? Do you already have the strategy? These are the questions you should be asking yourselves. We already have our go-to-market strategy, and is it validated? Meaning, if we do it 1,000 more times, it will yield similar results as it has the first 1,000, right? So do we already have a strategy? If so, who's going to activate that strategy? Do I bring in a contractor? Do I bring in a first marketing hire? Which, as you know, the first marketing hire at a startup is part strategy, part execution, part chimney sweeper. Like, you're doing everything on behalf of the business to help it grow. It's a very exciting and exhausting role for some of those first marketing hires out there. Or are you saying, I need a bench right now? So I might look to an MKG marketing. I might look to a marketing agency that says, I can show up for you right now today, and I can have a plan. And what I always recommend to the startup is, you're not going to have unlimited resources. That's not a surprise to them. So I would, if I'm in your shoes, I would challenge that marketing agency to say, show me a plan where you stand this program up as quickly as possible. Say it's like a content program, as one example. And then how do you fade back off of that, right? So I'm happy to pay you in advance to do more work faster, But then what does your maintenance mode look like? And how do I get your costs down? Which also relates to the investors too, right? They don't want to have this expense as a long-term expense on their books, right? They don't want that long-term commitment. That's why with startups, we always do a 2-month stand-up period. And then after that, we go into maintenance mode until they either don't need that and we can fade away, or they scale up and they say, we need to exit maintenance mode and we need a heck of a lot more support from your team to continue growing. So for the startup, I always ask them that question of, do you have the plan set? If not, you're going to need somebody to set that plan. Maybe that first marketing hire, or maybe an advisor to the business, right? Whether it's from your investors or elsewhere, an advisor that can help build the plan for you. And then it becomes, how do you want to staff and activate the plan? Which I always recommend keeping your long-term expenses as low as possible, right? Not making these long-term commitments, no annual contracts, no 2-year, 24-month contracts. For us, it's 60 days as an example to stand it up, and it's an expense up front. And then we transition to maintenance mode. And that's what I always encourage a startup to think about is conserve your cash. I'm a business owner, just like some of these startup founders are. So conserve your cash. I'm going to treat your money just like it were my own. And I would tell you honestly, you don't need us at $10,000 a month. That's insane. You might need us for the first month at 10,000, and then we go into maintenance mode and either fade away or just stay in a maintenance hum to continue supporting the motion. Part of that maintenance motion can also be training other team members on your team, right? Maybe you've got kind of like using a baseball analogy, you've got like a utility player or a glue guy, right, that can do some operation stuff for you. They're going to do some marketing stuff for you, maybe some sales engineering. Maybe they've got a technical background so they can speak, on a sales call with some sense of confidence. We can also, as maintenance mode, train up that person so they can take over the program and kind of pass it peacefully along to them. So that's what I always tell you to think about is, how does it start? If you're going to make the investment to buy the capability, how do you get the most value out of it as quickly as possible? And then third, how is this not a long-term investment on your profit and loss statement? Like, how do you cycle the investment down to a more manageable level so you're not burning so much capital into that one investment?
Yeah, absolutely. Because you need to get a plan. You need a plan, almost immediately. So you've got some type of urgency there. And that kind of reminds us about,
Right.
basically even with the current executives or current CMOs or CIOs or some of the other executive teams, you really have sometimes an urgency to really get something stood up, something that's running. Or maybe if a startup, for example, might not even have a CMO, and maybe you're actually their first step. You're their first hire per se for that augmented portion of the marketing. But for maybe like an executive that's already in business, that's already established, and maybe they need a little bit of help, or maybe they've got some type of urgency or some type of other goal that they're trying to reach, and they've got some other type of deadline. Is there anything that we could talk to a CMO potentially about maybe how they could look at their current strategy, reevaluate if it's working, if it's not, try to augment or try to shift or try to make some type of deviation? Because obviously, as Albert Einstein once said, if you keep repeating the same tasks and expect something different, you're kind of, I think that was the definition he gave for insanity. So, that said, is there something that maybe an executive could also use at the same token that might also benefit startups if they're a startup CMO, or maybe if they're even an existing CMO from like a well-established corporation?
Absolutely. And we're recording this at the start of 2024. So I'll tell you what I'm seeing and feeling in the market right now. There's a definite sense of urgency. When are things getting done? More so than I've noticed in the past few years. When are things getting done? Who's responsible for them? When do they plan to get this done? What's our checkpoints, our mile markers to make sure we don't get too far down the road without checking in on how this is going? So it comes down to one word for me, and that's accountability. When you're thinking about saying you're an executive like a CMO, for example, the big question becomes accountability, right? You ultimately, the buck from a marketing standpoint stops with you. So technically you're accountable for everything, right? The board, your CEO, your president, like anybody could turn to you at any point and say, Charles, CMO, how's this going? Like this is your number that I'm pointing at right now. You own it. You're carrying that bag. And so I always talk about accountability, right? So if you're that tip to the CMO is, as you're moving incredibly fast and it's going to feel like you're in a hurricane, right? There's just like noise and water and rain, and it's just going to be a lot as you are scaling up this venture as a startup. Think about who's accountable and when they're accountable to you, right? So what's your reporting cadence that they are, whether it's an agency, whether you hire like a VP of marketing or something like that who sits one layer below you, whether it's a marketing manager, like what are they accountable for and on what timeline? So I always like to look at things in no more than 2-week timelines, like a hexa sprint. Instead of a 1-week sprint, it's a 2-week. And that tells me, hey, here's where we are. We're either on track, kind of using EOS language, like we're on track or off track. And it's neither good nor bad. I'm not trying to punish anybody for being on track or off track. It's just, we need to know where we are at all times. So that if we are getting off track, we can course correct quickly. We can either eliminate the investment, we can make other decisions, we can course correct the existing investment. So I think in today's business climate, it's really about that accountability. Like that's the hard work that gets done. Plan building is really important, but that's just like a little glimpse of time, right, Charles? Eventually it becomes, okay, we've got the plan.
It is.
Now we got to execute this thing, and who is going to hold this whole function to account becomes the big priority.
I think that's a good point. I know that when I was, I believe on your show the other week, and you have a great podcast, by the way. So you might want to introduce it at the closing notes, because I forget the name of it at the moment. Even though it's your company names and so on and so forth. Yeah, I'll note that you're 100% correct on the fact that, you know, if you're not paying attention to metrics, or if you're not looking at something, then you're not going to know if you're off track or not, if there's an issue. And that's typically when I'm sitting on like an investor panel and I'm one of the judges. I'm always looking for a 1, a 3, and a 5-year plan. I'll be honest, I don't really care or focus too much on the 5 or the 10 years as most people ask for. I want to know what you're going to do in year 1 as a startup and what you plan on doing in year 3. Because year 1, you're fundraising. Year 2, you're implementing all of your processes that you told me you're going to do when you're fundraising. So year 3, I really expect something that's to highlight what you've done with all the money that you've been given. So I really expect to see some type of thought out plan where it's illustrating what you've done, what you're doing, and how you plan on executing your goals and your dreams, and actually making to reality all those numbers you put in your projections, that they weren't just hopes and dreams, that they were literal, they were real. And I really ask the 3-year question just to really signify that. I could ask a 2-year question. I think they've been fair, because I want to give them a year. They've got 365 days roughly, give or take, to implement everything that they said that they were going to do. So that's why I asked them, where do you plan on being in year 3? And it's not really a trick question, but it's an honest question, because if they planned for, okay, I'm going to get the money, and then this is what I'm going to do in year 2, they should already know where they should be in year 3. Like, there should be a logical progression. There should be a plan in place to take care of that. So that's definitely true. Having a plan for any sense of business is definitely a necessity, regardless if you're the investor, if you're the executive sitting at the top, or if you're the startup.
And one thing I'd jump in and talk about there, Charles, is an exercise that I use, and I'm happy to share this with any of your viewers. It's not proprietary to me in any way. I'm happy to share the wealth. An exercise that I use is called the 13-week success plan. So 13 weeks is an average fiscal quarter, right? It's generally between 12 and 13 weeks. And the 13-week success plan means that we're going to map out what's going to happen each and every week in advance. And then that's where you start to get an understanding of ownership. It's actually mapped out on paper of who owns what are they responsible for reporting out in terms of key performance indicators and results, and what's coming up in advance of that. So that 13-week success plan is something that I've brought into a few different professional engagements, and it always helps to provide a startling amount of clarity, right? Because everybody sees that and they go, okay, Charles is on the hook for program number 1, and he's got this week, that week, and that week, and this is what he's doing. So you get into this very binary state of it either got done or it didn't. And as we're working through the weeks and towards the ultimate goal at the end of 13 weeks, you can start to spot any roadblocks or impediments coming your way. So, Charles can be like, hey, I know next week I'm supposed to have, pound symbol done. That being said, I was actually waiting on 2 things that were supposed to be done last week, and they're not done yet. So like I'm just stopping the line, the assembly line, or I'm going to push the stop button and say, I'm going to be impeded to get mine done because of what's happening in front of me. Again, it's not about assigning blame. It's not about good or bad. It's just about saying, we don't want to get to the end of 13 weeks and go, how the heck didn't this happen, right? Like, how could no one have noticed, right? Well, that's what the 13-week success plan is for.
But that's more about communications, right? Because I mean, when I was with the financial company and management, we used a Kanban board to do that, and it wasn't so much of like me trying to tell my downlines that they were bad or I was doing a bad job or whatever the case may be. It wasn't a good or bad thing. It was like, hey, look, we have roadblocks, and it's about communication because sometimes some of the downlines don't know how to communicate correctly. It's like, oh, I'm waiting, I'm waiting, but that doesn't mean like consciously I don't know like, okay, you're waiting. I'm expecting them to get back to you tomorrow, the next day following. But when you have a roadblock and you actually signify, look, hey, we've got a problem. Like this isn't getting done. No one's contacting me back, or X, Y, and Z is broken and the API hooks don't work, or whatever the case may be. But it's a way
Sure.
to really call for help and get that type of clarification that you need. And that's something that you're 100% right. It gives you the ability it gives you visibility and communications to make sure that you can accomplish what you're trying to do. And those are great points. And I just figure we'll probably go ahead and try to wrap up here. We'll talk a little bit about what summarize a little bit of the episode. But at the same token, before we do that, Mike, I want to make sure that we interject at least now and then a little bit in the future about some of your contact information. How can people, if they want to get in touch with you, if you have questions and you think that, or if they think there's something that you might be able to share, or you have some knowledge about something, they can get a hold of you?
Yeah, absolutely. I'm most active on LinkedIn in terms of social media. So my name is Mike Crass, spelled Kilo Romeo Alpha Sierra Sierra, giving you the iCow alphabet there spelled out for you. So it's just Mike Crass is my LinkedIn handle. You can also go to our company website. It's mkg.marketing. Just type in mkg.marketing, and that'll take in your URL bar, take you straight to our website. And like I mentioned earlier, happy to share both experiences as well as tangible things like the 13-week success plan, right? That's something that I'm happy to share with anybody who's curious about how that works and how they might be able to bring it into their business. Also happy to speak to some of our processes for standing up. I know I alluded to this earlier. Happy to talk to some of our processes for standing up different marketing and growth programs for both startups as well as the investor crowd who's watching this show. They might have some questions about how we could work not just with one of their companies, but is there any sort of economy of scale and performance that we can bring into our portfolio? So absolutely happy to talk about those things. And frankly, I think both the startups and the investors would be interested in some of the experiences that I do have to share. Great example being working with an NDR or a network detection and response vendor. We worked with them for almost 8 years and took them from working together. Of course, it wasn't just us, but our collective efforts went from startup, 70, 80 employees to a $900 million exit to private equity in about 8 years. So it was quite a journey and tons of pitfalls along the way. Like the amount of things that we learned working together was staggering. So if you're interested in a $900 million exit at some point down the line, I'm happy to actually tell you that story of like the different things that we were doing, as well as even things we weren't managing, but that were happening in their sales and marketing motions. We were exposed to all of that because it was such an early stage business at the beginning. Figure that, both the investors and the startup listeners might be interested in hearing some of that.
Yeah, absolutely. I appreciate that. I think that I actually am interested in listening, but off the air. That way we can still make sure everybody can still contact you. But I really appreciate that. And thanks again for clarifying maybe what a CMO or another executive in marketing might want to do in terms of urgency and accountability and how that might actually take effect. So I know that those type of key points are they're a necessity. As I know that as an investor myself, we don't always have our own marketing people for our portfolio, so we kind of try to do everything ourselves. And the economies of scale are kind of a very interesting play. So I appreciate that, Mike. It's very important for us to know that we can synergize our entire portfolio with one group, and we can actually tie all of our current portfolios and all of our current companies together. So basically, when we do one unified plan, it's a unified plan for all of our portfolio as a whole. So we can talk about maybe if we have like an MDR, if we have another cybersecurity or AI company in our portfolios or whatnot, we can all tie everything together and create one synergized package. So if they're talking about like our AI product, for example, they might want to talk about our MDR or one of our other cybersecurity products. Hypothetically, I don't have an MDR product in my portfolio, but it's, hypothetically, that was what you'd be able to do. You'd be able to tie together all those different types of technology and try to make one uniform, marketing effort and marketing push. So it's not just a company, it's a suite of companies now coming to the market at one time with a unified branding and a unified message. I think that's a lot more powerful than just trying to do everything individually. But again, I'm happy to hear your thoughts just to see.
Yeah. My thoughts on that are, and we've seen this happen before. I think investors would be interested in it. Is say you've got 15 companies in the portfolio, right? Just making up a number. If we're testing different programs with one company, now we can see how that performs. It doesn't guarantee it'll either work or fail for the other 14, but we can actually kind of trial things out across the portfolio and then roll it out. You're talking about kind of that economy of scale. We can say, hey, this worked really well for, Portco ABC. Now we're actually going to roll it out for the other 14 now. It worked really well. We're going to change, obviously, some of the messaging, right? Each company is unique. So we'll change some of the messaging and some of the go-to-market elements will adjust, of course. But that being said, we are able to bring that level of intelligence and insight across the portfolio, as opposed to, if there's multiple partners representing the portfolio of 15 companies, they may or may not be sharing some of these things that are not working. They could be, but it might not be built into just the feedback loop of working with a marketing agency like us and having some of that economy of scale. And those insights at scale is probably a good way to describe it. This worked really well over here, or it didn't work. Save your money. You don't need to invest in that. We're going to go a different direction with the strategy and with some of the programming.
I know you said insights. That's a great thing. I alluded to earlier, but didn't actually follow through and talk about the metrics and stuff that we use as executives or investors or even companies for that matter. Do you want to talk about maybe some of the key metrics or insights that you guys use to really know and chart your success?
Yeah, you've got everything. I would describe it as like pre-lead, right? So it's all of your marketing metrics. More often than not, the investors don't really care about that. The executives don't care a whole lot. The marketing people care a lot. They're like, here's how many impressions that we saw, and here's how many people are searching for us. And the business starts to care about metrics when you start talking about, okay, how many leads are coming through? That's an indicator of not just the quality of the calls or the messages or the form fills. How many leads are we getting? And then we get into how many of them are actually booking and attending a meeting. And we're starting to transition into that sales pipeline at that point. There's kind of like pre-lead is all the marketing metrics, which all the marketing people use as leading indicators of, is this message really resonating? Right? Is this program resonating or not? And then it becomes, they're a lead, and do they set a meeting? Do they go to attend the meeting? And then does pipeline eventually start to get opened up? Is an opportunity really opened up after these first few meetings in whatever CRM you're using? So are there ops opening? What's the opportunity value? How much is being created in terms of opportunity pipeline? And then flowing through to how quickly are we closing? Right. And in a down economy, you start to see these really elongated sales cycles. Not uncommon, but it kind of happens a lot. In a hot economy, or if you're maybe a category leader or perceived as a category leader, regardless of whether you are or not that leader, you start to see those sales cycles accelerate. So you're trying to see the velocity at which they're moving from, you didn't know who the heck we were, to you saw some of our marketing messaging, you became a lead, you had a few meetings with us, and now how quickly are we moving you through the cycle at that point? So those are all numbers that we're really paying attention to. And our CMO clients are all paying attention to, especially the downstream, right? Because they're the ones going to these board meetings with the CFO and some of these, general and limited partners being on the board. They're the ones who are having to answer for, hey, we need $100 million in bookings this year. Like, where is this, sales leader and marketing leader? Like, where is this going to come from? Right? How are you going to generate this either through renewals or net new? So a long answer to your question there, Charles, but it's kind of split in three buckets. It's like the pre-lead, the lead and the lead qualification process, and then it becomes a true sales conversation of they've met with us and opportunity's been opened, and now we're trying to move them through. The real money is obviously at the end, right? We don't get paid in clicks and impressions, not yet at least.
Not yet.
It's all
No, not
about
yet.
let me get somebody through to a deal and get them to close. Solve one of their problems.
So that goes back to you talking about specifically the branding, about why you guys focus on branding and actually trying to build out that recognition initially when you guys are doing your plan, for example. And that's going back to trying to bring it full cycle and full circle of why you actually focus on building the brand, building all the other relationships, and then building the content around it, because you already foresee and know that in order for you to actually close this deal and actually do it closed one, they need to have some type of recognition down the line.
100%. They need to recognize you. And with the buy-in committees, you're going to have people with different levels of recognition of who you are, or even realization, right? So some folks are going to be very familiar with you. Others are going to show up to a sales meeting and go, I don't even know why I'm here. Like, who are you again? And what are we talking about? Like, I know I'm part of this committee, but I'm not entirely sure like where you're fitting into some of my responsibilities. So that branding becomes incredibly important. We've even seen it with a few scale ups in our own working portfolio, where they started to fall down at the sales stage, right? Remember, there's kind of pre-lead, lead, and then sales metrics. And at the
Right,
sales
yeah.
stage of the metrics, they started to fall down because people were like, I got busy, and frankly, I kind of can't remember who you are, Charles. And if I can't remember that, like, let's just push this another couple weeks. And the push becomes another push, becomes a, yeah, we're just like,
Cancellation.
we either bought somebody else or we're just not even going to meet with you and buy anything.
Yeah. I've been in that position myself where I was the executive doing the purchasing, and I'll forget the company's name just because I don't have that reminder. I don't remember. It's not uncommon for me to forget the meetings. Not that there's anything wrong with the vendors or the messaging. I'm so busy, things happen, and I forget. And if there's nobody that's reaching out to me, if there's no more touch points, it's out of sight, out of mind, and I forget. But I really appreciate your time today, Mike. I know that we need to wrap it up. We need to go ahead and transition. So if you would, do you have any other type of information or contact information, or you gave us your website already, you gave us your ability to find you on LinkedIn. Is there any other contact information or insight that we should do? And we're going to post this in the contact notes, but just want to make sure that the viewers have the opportunity. If you use Twitter or Instagram or anything like that, in addition to LinkedIn, or if it's just LinkedIn, then that's okay too.
Yeah, for business, it's really all LinkedIn for me. So I'm on there every single day. Go on. Seriously, I'm easy to find. Just Mike Crass. You'll see a big picture of a face that looks just like this. And send me a connection request, send me a message, and just say, heard you on Charles's show. Would love to have a conversation. I can't promise I'll get back to you the same day, but like I said, I'm on LinkedIn every single day. So as I see those messages come in, I'd love to have conversations with you, the viewers and the listeners of this show.
Absolutely. Well, I appreciate your time today, Mike. And again, thanks for being on our podcast, and we look forward to having you again.
It was a pleasure. Thank you, Charles.
You're welcome, Mike. Thank you. Now just trying to stop everything. There we go. Got the YouTube stopped. It streams to YouTube live. So I'll have to go